Hello and welcome to the Money Ladder Keep Climbing. Today, we are diving into the December 2024 update on India's monetary policy. We'll break down the key changes, what they mean for the economy, and how they might affect you. Let's start with the big news. The Reserve Bank of India, RBI, has just announced its bi-monthly monetary policy. A lot of people were waiting for this update, and here's what you need to know. In the last few months, inflation has been a major concern. The inflation rate recently hit its highest point in 14 months, exceeding the RBI's upper tolerance limit of 6%. This raised expectations that the RBI might adjust the repo rate, but no changes were made. Now, despite inflation pressures, the RBI has decided to hold the repo rate steady at 6.5%. This is the 11th consecutive time the repo rate has stayed the same. But why? Well, the RBI is focusing on balancing inflation control and economic growth. India's GDP growth slowed to its lowest point in 7 quarters, which was a red flag for the RBI. So, while they're still targeting inflation control, they also need to support the economy's growth. Hence, they made some strategic moves, but the repo rate remains unchanged. One major change announced was in the cash reserve ratio, CRR, which is the portion of banks' deposits that they must keep with the RBI. The RBI decided to reduce the CRR by 50 basis points. This reduction will happen in 2 stages, 25 basis points on 14th December and another 25 on 28th December. This will help banks have more liquidity, which they can lend out, potentially supporting businesses and individuals in the market. So, what does this mean for you? The CRR reduction will release approximately 1.16 lakh rupees crore into the banking system. This is expected to increase the availability of money in the economy, which could lower interest rates on loans, making it easier for businesses to expand and for consumers to borrow. To sum up, 1. The repo rate stays at 6.5% as inflation remains a priority. 2. CRR has been reduced by 50 basis points in 2 phases. 3. This will inject 1.16 lakh rupees crore into the banking system to help with liquidity. 4. Additional policy decisions around UPI and loans are expected to support the economy. That's all for today's update on the RBI's monetary policy. Stay tuned to the Money Ladder Keep Climbing for more insights and updates on financial matters. If you found this video helpful, don't forget to like, share, and subscribe. Keep climbing.